Welcome Nilesh Bhai at KJ Somaiya Institute of Management and Research. So this is Arthashastra Talks. This is our attempt to connect industry and academia. And we thought that we should call the thought leaders to express their perspective, because you talk about financial markets and students sitting here look at you. So we thought we should call these thought leaders, and we were looking for our first guest. So I think who better than you, Nilesh Bhai, who has knowledge of global markets, domestic market, across asset classes, whether it is equity, debt, bonds, forex. So welcome here, and I hope students would benefit, and we would try to get the best out of you, not only about your financial domain, also as a leader. We will talk about your journey, we will talk about how you started your career, so all this.
Thank you for inviting me over here.
So Nilesh Bhai, let me start with the current position. So we had RBI policy yesterday, and as expected, RBI has increased the repo rate. Now, one question here is that RBI is doing a great job. Even the growth expectation has come down, which people have different views. So I would want to know your view that how RBI is able to do the balance between growth and inflation. How the markets are doing, because if you look around, if you look at other countries, other economies, so as you always say that there is a sandstorm, the word I heard from one of your recent interview, and within that we are doing much better. So how we are able to do that, and how RBI is able to do that? So maybe that is what I thought I should get your views first.
So unlike other central bankers which are focused on one objective, RBI has always done multitasking. They manage growth, inflation, financial market stability, government's borrowing program, as well as currency. It's a very, very difficult job, but they have been doing this for decades. This time RBI was proactive in taking out liquidity. They were proactive in raising interest rates to control inflation. They were constantly watching financial market for stability. And on the rupee side, they have been doing this for decades, where they let market determine the direction, but they always control volatility. Put all these things together, we are in a massive global sandstorm. We are in really rough weather, but we are in a ship which is far better than rest of the world, and the navigator of the ships are far more experienced and doing a far better job than any other country in the world.
But Nilesh Bhai, now if you look at other economies, so what is your view on Bank of England? What they are doing? On one hand, they are raising rate, and on the other hand, they are buying government security. And
so Bank of England is trying to drive a car with accelerator pushed on, which is buying government securities and pumping liquidity back into the economy, and at the same time pulling the handbrake, which is raising interest rates to control inflation. Now we don't know how the car will move. Will the engine bust? Will the car move forward, backward? Will it remain standstill? They have a tough job. They have pushed themselves into a corner, and they are acting desperately.
Yeah, and they were the 5th largest economy, and we just took that place. And going on that same topic, so we were at 10th, we have reached at 5th, and maybe 4th looks probable, but whether we will reach 3rd?
So if we continue to grow at current pace, we should be 3rd largest economy anywhere between next 8 to 10 years. The 3rd to 2nd journey will be a slightly longer one, but eventually the top 2 economies of the world should be China and India, like it has been for the majority part of human civilization. For almost 1800 years, India and China were number 1, number 2 economy. Probably by between 2050 onwards, that will be the case.
Nice to hear that. I think these are golden words. Coming back to the bond market, recently we saw that the Russell bond index or JP Morgan, so maybe we are not able to get in. Now, what could be the reason?
So it's not that we are not able to get in, it's just that we are not agreeing the terms on which bond indices want to include us. For example, they want tax exemption for investors. Now, local investors pay tax on their government holding, foreign investors won't pay. That kind of unfair level playing field is not required. They want to do anonymous settlement. Of course, we want to know who our holder is. So we are saying that if you want India to be included in the bond indices, do it on our terms, not on your terms. And frankly speaking, we are probably one of the few countries in the world who hasn't defaulted to global investors over the last 5,000 years. From Harappa, Mohenjo-daro days till today, we haven't defaulted to anyone.
So okay, so this is nothing to worry as such.
No, I think we should now do business with the rest of the world on our terms. We are no longer a small minnow. We are fifth largest economy. We'll become third largest economy. We have about 7% market share in global foreign direct investment. I think we have to behave responsibly to create a win-win situation for global investor as well as local economy.
Great. So coming back to currency, and recently we have seen the rupee depreciation. So how much rupee depreciation is good? Maybe it is good for some sectors. The IT sector would love it. But
so that is a
take?
myth that rupee depreciation benefits IT sector. When rupee was 40 rupees to a dollar, Infosys had X margin. When rupee is 80 to a dollar, Infosys X margin is not 2X, it is still X. So your buyers also figure out where your currency is and then prices you accordingly. In our scriptures, we have been told that anything in excess is bad. The same thing is true for currency. If it is undervalued, it is bad. If it is overvalued, it is equally bad. You need to be in equilibrium, what we call in economic terms as near your real effective exchange rate. So as long as rupee trades near its REER, it is fine from an import, export and market point of view. Neither importers are at disadvantage nor exporters are at disadvantage when rupee trades around its REER.
So is there a number? What kind of depreciation every year? 5%, 4%, 3%? What
so
would be
essentially, rupee depreciation is function of your inflation differential with trade partners and productivity differential between trade partners. Now, India is little less productive compared to its trade partners, so maybe 1 or 2% depreciation because of that. And inflation differential maybe another 1 or 2%. So anywhere between 2 to 4% depreciation a year is given to maintain your equilibrium with REER. Now, if you have depreciated 10% this year, maybe next year you don't require depreciation and so on and so forth.
So you talked about inflation. So now in India we are crying that inflation has gone up and it's not coming under control. RBI is raising rate, what will happen? And you hear people talking. But the global inflation, the way you have seen, is much more. So you have to.
So inflation is a global problem, and our inflation few months back was in handle of 8%. Then it became 7, now it's becoming 6, and by Jan 23, it should become somewhere around 5 big handle. Last 12 months, American inflation is higher than Indian inflation. In last 75 years, that has never happened. Imagine American consumers earning 0.5% or 2% on their bank deposits are today having higher inflation than India. So, to some extent, RBI has done a great job in managing inflation, and my feeling is that while FY23 inflation number at 6.7% will be higher than RBI's target level, FY24 will be within RBI's comfort zone.
Now coming to equity market, where I think most of the people talk about. So the valuation. So some would say that now we look overvalued because everywhere around you is depreciating.
Yes.
So whether that decoupling, the word they use, whether it is done or maybe at some point of time we will also fall. We have fallen 5-7% recently. But what do you think? The near-term valuation and mid-term and long-term valuation?
So I was speaking with one global fund manager and I told him exactly this, that on a one-year basis, India look expensive. Our average premium to emerging market is about 40%. Currently, we are at 80%. So we are almost at 2 standard deviation above our historical average in terms of valuation. And he said, Nilesh bhai, nazariya badaliye. On a 5-year basis forward, India is the cheapest emerging market. And the place where I sit, where I manage hundreds of billions of dollars, I have to take a 5-year call. I can't take 1-year call. Now, valuation is in the eye of the investor. In our opinion, will there be volatility in Indian market? Answer is undoubtedly yes. While our economy may get decoupled from global economy over a period of time, our markets will always remain coupled with global markets. If there is a Russia-Ukraine invasion, if there is a China-Taiwan issue, our markets will get impacted. If US Fed raises interest rates or cuts interest rates, which impacts global liquidity, it will impact our market. If inflation goes up, if oil prices moves, it will have an impact on our market. So it will be unfair to assume that our markets will keep on going up and up and up only because our economy is doing well. Even in a good economy, markets will continue to go up as well as down. But on a longer term basis, there is hardly any growth story comparable to India. In 2014, we were 10th largest economy. Today, we are 5th largest. If we continue to work as hard as we are now, we'll become 3rd largest over the next 8 to 10 years. This growth is almost certain. And that is giving conviction to the investors to be part of India growth story. More importantly, this growth is coming with governance.
So getting into some sectors, so every time there is a theme in the market. So when COVID started, every pharma company was doing that. Then immediately IT started because everybody is working from home, and then again financial came back. So these themes keep on changing. So maybe what is the current theme if you have?
So India is a rising tide. It will lift every boat, provided the boat doesn't have a hole in it. So it's always important to invest with good promoters, good management, good business person. With that caveat that you have to pick up the right management, we believe sectorally today few themes are looking very attractive. One is banking and financial services. Normally banks grow at higher pace than the nominal GDP. They provide the credit through which economy moves forward. Right now NPAs are at a decadal low level. They are well provided for. There is a consolidation in banking business. Chances are that viewers will deal with probably 5 banks in country, 1 public and 4 private. Interest rate as they are rising expands banks' profit margin. So you have a scenario where there is consolidation in business, margins are expanding, NPAs are lower. What else do you want? So banks and financial services looks very attractive. The second sector which will do well is manufacturing. We have seen how chemical companies have delivered great return as they went into global scale of business. We believe many manufacturing sector will move in that kind of direction. China plus one is bringing many manufacturing business to India. Companies which will be able to grab both local and export market will do well. So selectively in banking and manufacturing, you should be able to get good winners.
And coming back on IT, now the view on IT is bearish, or some fund managers saying that they are now removing IT and all. Because they are saying if there is a recession in US, maybe this IT company will not get that kind of a margin. So do you think that IT is out of favor or it will come back, or what is the view?
So normally we like a sector when every investor is exiting that. That's generally the bottoming out of the sector. Now obviously this trade is like catching a falling knife. When you are walking towards Churchgate station from Fountain in the morning, you have to go through the crowd. But once you pass the crowd, you are more likely to get an empty train, a better place to sit. So same thing is in IT. We believe IT sector right now is facing a lot of headwinds, but some of those things will get sorted out over next couple of months. One, the falling rupee will marginally benefit IT sector, not materially but marginally. Number two, salaries and wage pressures have started disappearing. That pressure which was impacting their margin earlier will disappear. Third, undoubtedly there will be some slowdown in business, but overall that should start getting factored into the prices. And while maybe near-term IT sector's order book will slow down, over medium to long term, as companies and economies want productivity, they'll have to rely upon IT. No country can progress on the productivity chart unless until they have a good technology backbone. Indian IT companies are providing excellent solutions, cost-effective solutions. Their solutions pay back in probably 18 to 24 months time frame. Put all these things together, over next 6 months, you will get your opportunity to accumulate IT stocks. So the best time to buy is when everyone else is pessimistic and selling. The best time to sell is when everyone else is bullish and buying.
So whenever there is a sale in the market, you should go and buy.
Yeah.
Another sector which was out of favor nowadays is auto. People have different view that EV story, who would succeed, who would not succeed. So better to wait, or what is the call on auto?
So in auto you have three choices: passenger vehicle, two-wheelers and commercial vehicles. We believe passenger vehicles and commercial vehicles provide good opportunity. Auto components supplying to passenger and commercial vehicle also falls into the same category. Two-wheeler, there is still a headwind. Entry-level two-wheelers are not getting bought as much as is required. Passenger vehicle at the mid to higher end, commercial vehicles at mid to higher end are having a lot of waiting period. There is a huge demand for it. With chips supply improving, now the volume should pick up, and put together auto stock should do well.
Okay, so getting into a different area, you said one should not catch falling knife. So now
No, I'm saying one should catch falling knife, but with care.
So now my question is actually that. So there are two views. Somebody would say never catch a falling knife. The other would say you should average whenever it is falling. That is what you said. So how a retail investor? So I'm getting into the investing philosophy or investing style. So you get both the views all the time. Somebody said don't catch the falling knife, and next day the market goes up. Then said you should have bought at that level. So how a retail investor?
So I'll recommend retail investor never try to time the market. I haven't met anyone who can predict future. I have never seen anyone who can figure out exactly when to buy at the bottom and when to sell at the top. The best thing for retail investor is to simply do systematic investment plan. Every month, keep on investing something on a regular basis. To students, I will say, let your motto not be income minus expenses equal to savings. Let the motto be income minus savings equal to expenses. That one pizza, that one picture, that one dress, that one mobile phone which you will save, over a period of time will compound enough to give you financial freedom. To every retail investor, all they need for securing financial freedom is regular investment and long-term investment and disciplined asset allocation. SIP karo, mast raho. Don't worry about timing the market.
And you did a great work as an MFI head, that mutual fund sahi hai. I think all of us now know
yes.
that. So Another in the mutual fund category. So it's passive fund or active fund. So this debate is always there. So again, if you have a view.
So an investor will invest in active fund only if there is a value add to him. You are not here to pay me fees if I can't add value to you. So those funds who are generating better return than benchmark index, in those active funds invest. If those funds are not able to outperform benchmark indices, then just go into passive fund. As an investor, you need to only focus on your interest, not on my interest. It is my job to create value for you so that I can take your business.
Okay, slightly matured investor who would anyway buy some stocks. So what should be the strategy? Maybe somebody would talk about diversification. Somebody will say 19 stocks, somebody will 30 stocks, somebody will say take from each sector, or go with full whatever your money have. So what kind of suggestion you would give?
So as Warren Buffett said, stocks are like kids, don't have more than what you can afford or manage. At the same time, there is a proverb which says that don't put all eggs in one basket. So play according to your strength. If you are a doctor and you understand pharma industry well, then please go and invest in pharma, and for rest of the exposure come via mutual fund. If you are a steel trader and you understand metal market well, please go and invest in metal stocks. You will probably do far better than a fund manager. But for rest of the things, please come into the mutual fund. So play on your area of strength. Let me share you one story. Investing is all about common sense. So Peter Lynch was fund manager for Fidelity Magellan. It was the largest equity fund of his era. And he had a big team for supporting him. One day he took all that team members to a school and said that you build a portfolio and these kids will build a portfolio, and you should outperform these kids. Now the fund managers are egoistic community. They said, give us a worthy competition. And Peter Lynch said, no, this is the competition. So the fund managers opened their laptop, picked up high risk, high return portfolio. Kids were under no pressure to perform. They picked up whatever they felt like. After 1 year, the kids' portfolio outperformed fund managers' portfolio by a big margin. The fund managers were under so much pressure to deliver that they went for high risk and high return. Risk materialized, return never came. The kids were picking up stocks of those companies whose items they were consuming on a day-to-day basis. They were low risk and probably low return, but risk didn't materialize and return came. So investing is all about common sense, which unfortunately is not commonly available. So if you have common sense, you have time, you have energy, you have inclination, play in your area of strength. If not, then give it to professional.
You really need a great intellect to get into stock or a good nervous system?
All you need is a common sense. India's best known stock picker is just Bachelor of Commerce. He is not IIT IIM, he is not gold medalist chartered accountant. I am a gold medalist chartered accountant, but I am not even 1% of his intellect.
No, that you can't say.
No, that I can say because I know where I am.
People know that.
So investing is all about common sense. I can share another incident. So one day a distributor took me to Haridwar to meet someone, and this gentleman had a health issue, so he had retired at the insistence of his daughter. But he then asked daughter's permission that I must indulge in something, otherwise how will I remain active? The daughter allowed father to do one trade in a year. The year where I went to meet him, Punjab National Bank had come out with an IPO at below book value, and he had picked up Punjab National Bank. I think if I remember the numbers correctly, Punjab National Bank had done IPO at some 25 bucks. It probably would have got listed at 35 or 40, and the peak was about 1,000 rupee. Sitting in Haridwar with the condition of doing only one trade in a year, that gentleman hit a sixer. So investment is all about common sense, and unfortunately people don't use it.
Okay. So now let me get into your personal life. Let me have a look at that. So you said you are a gold medalist chartered accountant. So you wanted to be a fund manager or you wanted to be in the equity? What
No.
was like?
So as a Gucchu Bhai, equity comes in our DNA.
Uh-huh.
And when I was doing my articleship, it was Harshad Mehta Teji. I got lured to make easy money. I lost everything. I had borrowed money, so that was a very disastrous experience. And then I had, gone to, because I was a gold medalist chartered accountant, I received a lot of invite to join. So I went to Larsen and Tobro in their Powai campus. I got a job letter. And the person who had given me that letter said that, look, Nilesh, my recommendation is that go to financial market. That will be far more active market. And anyway, you have this job offer. So if you don't find anything, come back here. And based on his guidance, I went to financial market. I was lucky to be in ICICI. I was on the sell side managing investment banking business, merchant banking division in those days. All the IPOs which I managed, even today they are not above issue price. All of them are below issue price.
That is not your fault, huh?
No, so that was again one more experience that,
okay.
you have to price the things correctly in the market. And then one thing led to another. And I was lucky that I had mentors who taught me. I was lucky that there were mentors who told me to be inquisitive. I was lucky that I made many mistakes but rarely repeated them. So one thing led to another, and then, before you realize, you became fund manager.
Yeah, because your sell side to buy side, I was there when you left Axis
Yes.
Capital, and that time I asked you this. And there is a huge connect with the retail investor. That is
Absolutely.
what. So that because of your humble background, the way you talk to people.
So I always wanted to work in a place जहाँ पे पैसे भी मिले और दुआएं भी मिले. If I make people rich, मुझे दुआएं भी मिलती है और मेरा जॉब अच्छा करूँ तो मुझे पैसे भी लोग देते हैं. So this is the most noble profession. This is the place where I can give financial freedom to my investor. It's a huge responsibility. But if I do my work well, with honesty, investors forgive my mistakes and they really bless me. When I was in my courtship period, my wife was professor, so she used to get a lot of respect. And I was a fund manager whom no one bothered about. So I always wanted to show to her that, look, one day I'll reach a place where people will give me as much respect as you are getting today.
Yeah, so I will ask a question connected to that now. So you are so busy nowadays. So I was watching at your Twitter handle. So maybe 3 interviews in the last one day, and you have lot of meetings. You are here, and today also you are planning to go somewhere else. How you manage time? This is my personal question also, because we get bogged down with certain timelines. And talk about your better half. You said how she manages that, because the time you spend outside and you are still looking very happy and all. So maybe you are keeping her happy. So how you manage everything? Because that would be a best kept secret which you can tell us now.
So one, I enjoy what I am doing. As I said, it gives me money, it gives me blessings. That can't be better than this. And more importantly, at some point of time, you start doing multitasking. So it's possible for me today to listen to something and at the same time reply to something. I'm able to read probably a little bit faster than others. This is again the skill developed over the years. So you just try to do multitasking in an efficient manner, which allows you to crunch a little bit more than a normal person.
So I know about your reading habit. So let me tell the viewers that when we were leaving office, when we were together for some time, so at 6 o'clock all of us were leaving and you were getting into your cabin, and that time I asked you this question, that why are you reading now? So you told me that if I have to talk tomorrow and to all of you people, so I should get time to read.
Yeah.
I think that was the secret.
No, absolutely. If I have to be better than others, I have to put more effort. There's no choice.
Other than your financial market stuff, your domain and all, do you read anything else, any other
So I'm a
area?
vociferous reader. I can read on anything. I read at this age more spirituality. Before that I was into sports. Before that I was into Bollywood. So, with age things change, but read anything what is available. You never know how it will help.
So your knowledge of cricket and Bollywood and Sanskrit and all we have seen, almost every day you can get that analogy into your
Yes.
financial market. I think that is what we have seen. And maybe now some advice for our students, because you have two at home. So you have a millennial and a zillennial, Gen Z.
Yes.
And all of us deal with that. So maybe you know their behavior, you know what kind of anxiety, what kind of aspiration they have. What you would want to tell them?
So my advice is very simple. India is going to do great, and all of you will benefit out of it. Please have values as your anchor. Value of honesty, ethics, value of hard work, taking no shortcuts. If you follow these basic values, I have no doubt in my mind that India's rising tide will lift everyone.
So before we depart, Nilesh bhai, one leadership mantra for students. What is the leadership mantra?
So the one leadership mantra which I have believed, honesty is the best policy. I have lost 50-60% of clients' money, and I have gone and met them and explained why I have lost money. Most of the time people have actually given me more money to manage because they never doubted my honesty.
Great. So we have an MBA finance batch here, and obviously these people are quite, the students are ambitious, they want to get into the industry. And financial world, as we know that there are a lot of opportunities. So any message for them?
So one thing, many a times we believe that our work will speak for ourselves. Well, today's world is not only about content but also about communication. So please focus on content as well as communication. Work will definitely speak for you, but you also have to speak for yourself. So make sure that your content and communication is combined.
Very well said, very well said. Small rapid fire, maybe I would ask, just to know you more as a person. So your favorite food?
Khichdi.
Okay. Your favorite movie?
Anand.
Favorite actor?
Amitabh Bachchan.
Favorite
In my generation, there was no choice.
Yeah. Favorite actress?
Actress has kept on wearing, it's like Lux advertisement.
Okay. Favorite travel destination?
I'm comfortable anywhere. Mountains, beaches, everything is fine where I can, go and relax.
Early riser or late riser?
Late riser. But it's a bad habit. You
But
should
you
be
work till late.
because I work till late, hence I'm a late riser, but it's a bad habit. Please don't follow it.
Okay. Thank you, Nilesh bhai. Thank you once again. And so we are very lucky to have you today, and you have made our day memorable. And I think who other than you would be the first guest on our Arthashastra Talk. Thank you once again. Stay tuned for our next episode. Thank you.
Thank you.